The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi, everyone. Basil Chapman sitting for Larry Pesavento. Larry was not able to make it, so my pleasure to be sitting in here. And this is the Futures Hour. Let's run some of the futures. We're looking at the E-minis down 20. Yesterday, spectacular candle on the way up and giving it all back. All back, and in fact, all back. In a few minutes, it'll be all back and some. In fact, right now it is. The low yesterday was 1843.73. We're at 1843.75, and we're at 1843.75. Whoa, this is going to become an engulfing candle. So what we're looking at here is a situation where the 120-minute chart went to, in the Chapman wave methodology, I don't want to go into that too technically right now, but it made the pattern that I call a peak C1 and a peak C2 top, pulling back very sharply, went under the 200-period moving average, and then kaplop, it's given back all the gains, gone into the rectangle support area that it had formed back on the 8th of April, so a couple of days ago. It's going to be very important. Why? Because it closed under 1841 would say it's going to give back everything. That is bear market material. Now, why do I say bear market material? Because rallies in a bear market are vicious. They come about under weird conditions. Just you never know when they're going to happen. And then, as everyone says, oh, that's it. That's the end of the bear market. We're going all the way back up. So the very next session or the next bar, whatever the case is, you give everything back, and that's what we've just seen. So that repellent line, I explained it a little bit in my show. My name is Basil Chapman. I have the opening call. That's my daily service, a very comprehensive outlook on the market, as well as stocks that we have, long and short, and it comes out every day. 8:35 is where the last thing goes out. That's my trader's corner. But I start sending charts to my site way back at about from about 6:30 in the morning, 7 o'clock. I'm already sending charts off, and of course I have my show here. This is the 11 o'clock till noon Eastern time. I hand it over to Larry, and I'm here Monday through Friday, every market day. So what's really important about the move that we're looking at right now is that repellent zone. I've got a particular technique that I call the two channel lines. They're usually at the top or the bottom of a particular series of price points that have been hit. And in this case, it shows you this downtrend line. And it said that if the E-minis this morning were able to get above 1869, 1870, and hold, then it would have been right into the area that normally would be a repellent. If it spiked above the final, the zone itself, that upper trend line, into the 1874 area, that would be very positive and say you're going to retest the high of 1892.50 that was made just recently, back Friday, a week ago, I think it was. Yep. Now we're giving it back, and that really is very negative action. So the selling's coming in. We're seeing it. We're seeing it at the IBB now, which is the NASDAQ biotech sector, is down at 224. In the meantime, back at the ranch, let's just look at some of the other things. We've got, I want to continue with the conversation that I was having just a moment ago on my show with Sean. We were looking at Sears, Sean in Hudson, New Hampshire, and we're going to continue the conversation. Hi, Sean.
How you doing? Hey, so we talked about Sprint. Now I got a question about the Chapman wave. I know this is Larry's show, but if
that's okay.
So I've emailed you a few times. Back in January, actually, I had a question, but now it came up again yesterday on the different end. Before it was the top, now we're at the low. So we have on the 120-minute chart.
Okay, are we back? Are we on
No, the Dow. I'm sorry, we're on the Dow. The Dow.
On the Dow. Okay, let me go to the Dow. Give me 1 second.
Came in your charts today too.
Okay, so here we go. INDU. Yes, here we go.
We got a trough B on the 120 at 11:30.
The trough B.
Yeah, the trough B. And then I'm looking at it saying the next candle is peak A, but you're saying no.
All right, so let's just go this way. We're talking apples to apples. I've got the Dow 120-minute chart here. I've got it fully notated with the Chapman wave. And basically, folks, what we're looking at is in the Chapman wave, the cleanest and simplest way of doing it is to look for the lowest low bar and merely count each successively higher peak. When you get to peak D, that's where you usually get you don't have to, but that's where you usually get the biggest pullback. And then what happens is if it recycles and starts another move to the upside, you just want to count each successively higher peak. But if you're using the MACD, the moving average, convergence, divergence, as well as the slow stochastic, certain things can keep you in the trade even longer than you would expect. So let me just go through this just for one moment. Back on the 14th of March at 16.046 in the Dow, that was at 4 o'clock on that day, started a move that began a leg A, then a B, then a C, and then a D. That D actually came in with a left side, right side price time match, and it stopped at D. Second time it did that before, back on the 7th of March, pulled back from 16,466 and hit exactly the 200-period exponential moving average and started another move. That went peak A, B, C, D. Then at D, it didn't pull back very much because the fast-moving average was still very strong, as well as the slow stochastic was way above 80%, even in the 93% area. And it went E and then F. F is where you got to be real careful, and that was on Friday, and it turned around from leg F to peak F, came tumbling down, and then on the way down we call them troughs, and like little V-shaped bottoms. And then that little V-shaped bottom occurred on the 4th of April at 16,392, a little bit of a bounce, and then it pulled back and went underneath there like a little mini H pattern, and then it went down further, and it went down to 16,180 at 11:30 in the morning on the 8th, and then it rallied peak. Now, the reason why, now are we talking about the very next bar?
Well, we're talking, okay, we're talking about your market overview today.
Okay, yes.
And you're showing in the market, I don't have it up here.
Well, I'm going to find it right now.
I've got it. You're showing like we're in leg A, but I'm showing a peak A on the first 100.
You're talking about the black in the overview. Yes, you're absolutely correct. That should have been B.
Okay.
Oh, you're absolutely right.
Those are the things that kill me when I can't figure it out.
Oh, well, thank you, because now that I see it, I'm saying to myself, that was the dumbest mistake. You know, I do so much that sometimes I just overlook a little thing like that, but in fact it becomes really important to people because they're looking at it and they're saying, hey, wait a minute, mister, I get something different. And you're always talking about this stuff, and if I get something different from you, then either I'm wrong or you're wrong. And since you're the creator of it, you're probably not wrong. I must be wrong. Actually, that's not true at all. So I get a lot of calls from people saying, hey, wait, you just missed something. Well, not a lot. It doesn't happen often, but it happens often enough, and you picked it up very good. Folks, this is what's going on here, and it's a really great question because I have it here on the chart, but I had missed it with a black background, a very much smaller chart. I just never looked at it to see that the high of in the 120-minute chart at 11:30 on the 8th was 16,294.77, and the next day it was 16,296.86, and the next day was lower at 16,290. That makes a peak. It's as simple as that, and I missed it, but I did get it on the cleaner, the bigger chart, and you're absolutely correct. So this is a B, and I actually put in a B minus. I really shouldn't put the B minus in. I should have the patience to wait. A B minus automatically comes into place if, in fact, it takes out the left side low. Now, that's just slightly different to my CD introducing the Chapman wave methodology from about 8 years ago. It's a modification I've made, and that says that if you hold the left side low, in this case 16,180.28, and start another rally, and then you take out that previous high, that activates that B and becomes a C if, in fact, that's a straight line move up above there. So, hey, thank you. Great observation. And thank you for pointing it out. People think I'd get upset. I do not get upset at all. All I want, the objective of the Chapman wave is to identify as correctly as possible the last peak or trough, because the Chapman wave is the waveform that never sleeps, and therefore you want to get to a D, and if you miss a peak, it means that you might be at a D and you think you're only at a C, and you do not want that to happen. So I'd like to be corrected as quickly as possible. So
well, I don't look at it correcting you. I'm looking to learn this thing, because I've been getting your newsletter, I think, for 7 years. Last year I was sick over a while. I didn't get it, but I'm back in it. And I'll tell you, I tune out CNBC and Bloomberg and just pay attention to what you're saying, and for the most part, it makes me money. So I appreciate the work you do.
Sean, I really appreciate that, and obviously you are an astute student because you picked that up, and I really appreciate that. And thank you for being a subscriber. So I hope that clarifies what we're looking at.
Okay, thanks a lot, Basil. Appreciate it.
Thank you very much. So, folks, this is very important right now. You can use this particular technique in any time frame. Look, there's your peak D. Remember I say how important peak Ds are? Well, peak D right there in the 5-minute chart at 7:35 this morning, the 10th, at 1865.75 in the E-minis. Makes a low, makes another peak A, B, C, and another D slightly higher at 1866.50. And as they say, that's all she wrote, because you see the MACD stochastic failing right there. You see the on-balance volume, that blue line. This is what we studied last week in my Master Trader Series, level 2. And what happened was, all of a sudden, the maroon line, which was support, and the little brown line, which was underneath it, showing that it was giving cushion to the upside, is now giving cushion to the downside, and it's expanded. So the bounce here has tremendous resistance in the E-minis between 1847.25 and about 1849. And that's the way that's the simplicity of it. Now, I've been on the show, so I haven't been able to put my notation. But even when I'm trading these E-minis, I'm busy notating away. Why? Because it doesn't do it automatically. I have to do it by hand. But doing it by hand is like, it's like driving. For some of us who grew up with a standard transmission, I was just thinking the other day, I don't think anybody even remembers that you used to have to double clutch to put into first gear before the synchromesh came along. Hey folks, I'll be right back. Basil Chapman sitting in for Larry Pesavento. We're going to look at a lot of things, including Terra and then currencies, and in fact, politics.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. I just want to do a couple of things. I'm going to work backwards because that's just the way it is. Vanguard Natural Resources in a trading band. It's $30 right now, 8 cents. I see it in an H pattern that goes to an M pattern, a lowercase h to a lowercase m. So the real test will be, can it break 30.48? I can't remember who. Joe asked about it. Joe, if you're long, I'd look at it as a trading range. Once again, might be a dividend play as well. But at the same time, I see it just stuck here. I think it's going to have a tough time closing above 30.48. But if it does that, that's very important because 30.48 represents the last left side resistance, and then it can tackle that candle of the 28th. That's number one. Number two is my thinking here is it's going to come back to 29.60 to 29.40. And it's just stuck in this range. If it takes out the low, I told you about the upside, but if it takes out 29.26, I'd be real careful with this because although I don't think it's going to go much lower, it's going to be stuck in the range. Stuck is also not so good. It can be a waste of money because, you want up or down. If you're long, you want to go up. So I actually tell you this, I don't see it doing very much of anything right now. So now I'm going to go, I do want to go to the Panera for Sally. I hope she's listening. Panera, now, a couple of things. Panera, I haven't been for a while, but I always like Panera. It's just this nice range of food from what I like. But I think it's made some kind of a hat-trick top here. It's in a trading range. But my guess is that it's going to go towards the lower part of the trading range in that H pattern. And all I can say is that if you're short, Sally, which I think you are, peak D in the weekly, with an arch formation, says that if it closes under 164.01 PNRAs at 167.80, that's still 6 points to go. Oops, that's 164. That's still 3.5 points to go. If it closes under there, there isn't too much support, and then all of a sudden the support that I would have drawn in says that I've now got to join all the lower troughs, and that takes you back to the 155, and I think that Panera is going to be going down towards the 150s. So that to me, that you're in the right position. Only thing can happen to have another little spike to the upside. There's a 171. It could pop over 173.47, the 200 EMA, to maybe 175. But then I think it's coming down. It's taking its time. Now, the thing about Panera is they were doing everything right. Shach, I think is the guy's name. He's in Brookline, Mass, the city next to me here between Boston and Newton. And they did just a fantastic job. But I'm suspecting that there was something that they did that I heard him talking about, where they've got some restaurants where you can pay what you think you can afford. I just don't see that as a viable option. I think that that's while it's humanitarian and all that, that part of it's great if you want to put it into the charity category. But don't mix charity and business like that. I think it's wrong, and I think that Panera is going to have to rethink that particular aspect. And I think the food costs and everything, I believe that Panera is going to be going lower. Great company. I think they're making a couple of mistakes here. That's number one. Number two is we wanted to look at going backwards, if you don't mind, folks in the den. It's just easiest for me. EEM is in leg E right now. Now, I know that everyone's talking about the EEM as a contrary play, etc. I'd say that if you are long, I'm going to recommend, because of the general market outlook right now, down 126, I'm going to recommend that you take a little bit off. Just part of money management had a spectacular move, the EEM, which is the iShares. Oh, let me just get the exact title. 120 million. That's the iShares emerging market ETF. Nice move. It's approaching that down channel, what I call the inside track, and that says that level is at the 43.63 area. So it's just about a point and a half where it starts to get into that strong resistance. So I'm not saying get out. I'm just saying I would recommend taking something off, because if the Dow closes under 16,000 at any point in the next week and a half, I'm pretty sure that the EEM will also pull back. But it might not be as severe, but it will pull back. 41.54 to 41.14 would be the good support. So over a point, you might say to yourself, hey, I'm not going to do anything over a point. I'm just saying that, for my opinion, I take a little bit off here. Not the whole thing, just a little bit off to reward yourself and to say, you know what, that's money I might want to put back in the low 41s. Between that level and 40.45 is major support in the 200-period exponential moving average. That's all. So that's that question there. Let's see. This running back. Oh, was that a break so quickly? SNDK. All right, Sandak. We'll look at that. There's a break coming up, folks. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. Basil Chapman sitting in for Larry. Just real quickly, SanDisk is looking like it's going down, made a peak. G in the daily, G in the weekly, and a monthly chart is at a leg D. So I'd be, if you were short, stay short. I'm not sure if you're short. Question in the den was, who was it? SanDisk. All right, I can't remember offhand. I'd be remaining short. I think it's going to go down. The real big test is this candle here of the 18th at 74.73. It's trading at 76.38, down 2.28. 9-period moving average is resistance. MACD is not good. Stochastic's not good. Weekly still has some strength. So the balance would be 79.05 to 79.50. Most importantly, on the way down, this candle is giving you no support until 74.73. And I'm going to go to our next caller. We've got Ari in Arcadia, Florida. Hi, Ari. How are you?
I'm doing very well, Basil. Good afternoon.
Good afternoon to you.
I'm looking at VALE.
Vale, yes.
And the reason I'm looking at it is it's the single largest holding in EWZ. You talked about EEM, which is emerging.
EWZ, huh? EWZ at peak C right now. We're looking to see if it's going to make that D. So let's look at VALE. Let's see. I should have it all notated, but I don't. Yep, it's there. Okay. So if you give me 1 second, Ari, folks, we're looking at Vale SA. It is, what exactly do they do?
They're there an integrated...
Are you there?
Yes. Can you hear me?
Oh, something happened.
I can hear you.
Did I just press the button here? He's here. Are you there?
Yeah, I'm here. Can you hear me, Basil?
Can't hear you. So let me just do this for 1 second as we get that organized. He's here, but I'm not hearing him now. Why am I not hearing him? Let me just check.
Basil?
Can you hear me?
Yes.
Let me just check to see.
I can hear you, Basil. Can you hear me?
Sound. Let me ask my engineer. I just want to double check. It's not good to be talking to nobody. He can hear you. Okay. So here we are. We're in peak D in Valet, and it made a peak D before, and it pulled back very sharply in an arch formation. Now it's made the V formation. Man, I tell you, the sine wave moves of up and down that we've been seeing lately are quite tremendous. Most importantly, what I'm looking at here is it's holding the 9-period exponential moving average. So, Ari, this is one I'm going to recommend. I actually can't hear you. Maybe my engineer can ask you a question and then just type it into my message board. But in the meantime, the monthly chart of Valet has got that H pattern that could turn into something very positive. It hasn't yet. It's starting in the weekly chart. I don't like the give back of the last few days on the weekly chart. If it closes, if there's a move, let me put it this way. Trading at 4.86, VLE is down 14 cents. If it pulls back, it's got a lot of support between 1466 and 1454. If it takes that out, 1427 will be the next period of support that in time and price. Why do I say time? Because the fast-moving average of the MACD is very strong, and stochastic, even though it's pulling back, is still at 84%. So this is what I wanted to do. I wanted to just show you, and I'm hoping that I can expand it. I've got a slower moving average underneath the fast-moving average. That's about to cross positive. That positive turns out to be a repression line for the price that you're watching. And in this case, the price would be the candle high of yesterday of 1517. So I would not be surprised if the EWZ, which is having the same kind of consolidation, although it's in C, I've got it, there's no other way I could count it, but in C, is actually undergoing the same process. Thank you for pointing that out. I must write that down because I love to look at parallels and mirror images and, in fact, what I call pilot light stocks. And in many cases, we're finding out that some stocks represent on a, God, they've got a special word for it, a word that implies the percentage move of that particular issue in relation to another has a beta or at least a correlation of X%. And in this case, it's a very high percentage. So here's my thinking. In Valet, which I'm going back to right now, if you have a position, then you've got to be a little bit careful right here because it could pull back and the level of support would be 1454 to 1427. If that gets taken out for whatever reason, market-wise or whatever, over the next couple of days, you've got to be really careful for only one reason, because sometimes the price can pull back and then drag that fast-moving average lower and lower. I suspect that, in fact, Valet has a lot of support. You can see today it's only down 14 cents. Well, it's 0.93%, which is between the Dow 0.76% down and the S&P down 1.20. But at the same time, that weekly chart is still showing enough strength for me to say my thinking is it's going to be a contained move to the downside and use up time more than price. And then you should see that one spike that I was looking at for EWZ to leg D, that could take it either to E or it just fails under 1559. And then we've got to see, has the fast-moving average of the MACD started to decline? If it has started to decline, then it's starting to say, okay, now look at that 1550 area, 1555, as potential resistance that needs to be pierced decisively. To break out, you need that weekly chart to take out the high and start to really travel in the area of the highs of the bar of the weekly 22nd of November of 2013 towards 1616. Between 1517, means it's still got a rally from here to 1616. That's the candle that's going to be the most important candle when you're looking to the left side before you can even think of trying to tackle the old high, recent high of 1714. So I hope that helps you. So it's kind of thorough. The only thing I want you to do is grab the 120-minute chart. Yeah, the 120-minute chart is doing the same thing. Sideways consolidation, H formation, probably will take out the left side low, and then we're looking at the candle of at 11:30 on the 7th of April, 1491 high, 1452 high. Everything comes in to say that that's really a very, very important level of support, that 1450s. So I hope that helps you, Ari. I'm sorry we lost the sound. So I want you to go back now. I want you to look at the IBM chart. The IBM chart is showing something very interesting, and this is what I was talking about when I mentioned to my subscribers that we're looking at a rotational market that's favoring some stocks that don't even know that this is going on. They don't even know that there's a Dow down 130. In fact, IBM's up $1.87. It's up 0.95 when the Dow is down 0.80. So in this particular instance, I had a question. John wants you to know about shorting IBM. I would be very hesitant to short the very best stocks that are acting well in a market that's under pressure. And I'm just going to make it as simple as that. Why? Because you could be right, but you'll only be right for a 120-minute pullback. Let's see, this is, that's A, B, C, pulls back, D, E. Yeah, a 120-minute pullback that can take it very quickly to the 196 to 195 area. A give back to yesterday's prices. Not yet. I'm absolutely looking at stocks like IBM as clues, but right now it's a cup formation in the weekly chart. It's a very positive pattern. I love when stocks are ignoring the overall scenario, whether it's up or down. In this case, IBM is one of those. So IBM has really been in a bear market since it made its all-time high. You remember the late Ed Young was, when IBM was in the 80s or something, it was the 90s, it was saying $200 stock, went to 215.90 back in March, a year ago, March of 2013. And then it plummeted to 172. Well, 30 points, 15, 16, 17% for IBM. That's a big pullback, and time. Use time and price. So no, be careful. I would not consider it short. Okay. I hope I haven't skipped anybody out there in the den that wanted a question, but let me just do this. The EUR USD, that is the euro currency dollar pair, holding very well. It's in a leg A. And this A is starting to see good technicals. And it's going back to the very ugly candle of the 19th of March. It's saying, I'm making a U formation, and so far it's in a quicker time frame than the way down. That is a positive. I don't like single leg A's up, so we're going to watch this closely. But the weekly chart is saying, hey, I'm making higher highs and higher lows, and even this low is on that trend line. See that dashed trend line right there? What I call the inside wedge buy zone. It held it, and now it's bouncing back. So the euro-dollar currency pair is doing very nicely. Now, that goes against the grain of the market right now, because a lot of the time we've seen the euro moving up has been helping the market, number one. Number two is, in the weekly chart, remember that the channel that I've just been discussing, Chapman Wave Inside Track? Well, that inside track, it's above the resistance, the final resistance. It's above the green line. It's been doing that now for 3 months. So if the euro is able to hold above 1.359, it's at 1.388 right now. It's up 0.003. If it's able to do again, but preferably if it can go above 1.3966, if it can go above last month's high, that doji candle, and close above it, it says the next month could even be another modest high. That's going to be very important. So I'm going to be watching that very closely. You remember what I always say about the dollar? The Fed likes a low dollar. They go bap, bap, bap on the head of the dollar, and it's pulling back very sharply. I see nothing in the dollar. It's under the 9 EMA in the monthly chart. The H pattern to an M pattern. What's really important is if the dollar, the index itself, closes under 79.27, the low of the week of the 14th of March, that's going to say, hey, you know what? You might even test the 79 round number low of October, the week of October the 25th last year. And that would say that the euro could, in fact, move higher. And in the daily chart, not a pretty pattern. There's the H pattern that is, as I say, going to test the left side lows. So that's the dollar. And now let's go back to gold and see where that's standing right now. Giving back some, no, it's up 12.90. So, yeah, I think the dollar is still acting quite well in the daily chart. I've got a target that says 13.28 to 13.33 would be, that's kind of a range that I'd be looking at if it continues in this uptrend, and so far it has. What am I missing? Okay, there are a couple of things I want to look at. If you're looking at the TLT is acting very well. It's up 94 cents, up 80.86%. 109.78. If the dollar takes out 110.39 in the daily chart, if the TLT takes out in this V-shaped pattern, or small H, it's a combination, V on the left side, cup on the right side. If it takes that out and goes above 110.39, I'm calling that leg D. But here's what's really interesting. It means that the H pattern that went to an M pattern in the weekly chart has started to form something very different. It's forming leg C in the weekly, and that says there should be a leg D. It has failed at C before, but in fact, I'm looking at this and saying, walk in the 9 EMA, MACD's good, stochastics at 86%. That is very good. So there's the pattern that I drew before. The H goes to an M and then it breaks out. That's what we're going to be watching here in the TLT. If I look at bonds at US dollar, bonds in leg E in the weekly chart. That could be a restart, A, B, C, D. It actually looks more like a D. Doesn't matter. E at 134 and 16.30 seconds. This is the continuous contract. This is not the actual trading vehicle. I don't tell you, I have very few bad ticks. TradeStation, the one thing about TradeStation, I value the integrity of their price. When things get changed in other platforms, they invariably default to what TradeStation has. Not every time, but almost every time that I've checked it out, taken the time to check it out. So 132, 11.30 seconds. The high of the 28th week of March, the 28th. Let me double check. That's 16. And today we went to 27. We have started. I don't know. I'm calling this leg F. Everything about it says that really is a restart and it should be A, B, C, D. Doesn't matter. It could have recycled. This is an F/B. Let's call it an F/B. And that says if bonds are already starting to move now, and remember what I've been talking about is that the dollar whack-a-mole, bap, 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 to keep the dollar down. Push, 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 push. That's what the Fed's doing for bonds. They want bonds to be up. They want yields to be down, and that's going to be very important. Maybe we'll take a moment, if I get a chance in the break, to switch over to the other chart that has a triple yield chart. I'd like to see whether the 5, 10, and 30-year in relation to one another. So let's see, we've got a break in another few minutes. So I had another question. Oh, question on the Dow. What?
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Think here, I just lost my the audio part on my side, but I've got the audio part on your side. So the question was on the Dow. So it's a peak D in the Dow, pull back very sharply. This is only trough A, and how this becomes, and this is exactly what we were thinking that would happen. I thought there'd be one more day. You know, this is what happens in markets when you get out of your short positions. Well, we're not out of all our short positions, but when you get out of your short positions, what happens is trying to get back in is really tough. That's one of the reasons why in the IBB we have remained short, even though we keep we'll trade the long side for quick trades, but we're remaining short from right at the top. 275.40 was the high. We're short from, I think, 271.20, remaining with that core position because you just don't know when it's going to continue in the bear market, and that's really tough. It means you sit in your position regardless, and you've got to believe in it. And in this particular case, I really do believe that this is a peak F hat-trick top that I'm looking at in IBB. The real test comes, how does it handle at 223 That's over 50 points, 52 points from the high. That's the biggest move down that it's ever had. How does it handle the inside track support that's coming up, which will be in the 215 to the 211 area? Because I have lower targets for it looking out, but in the meantime, that would be the area of the biggest bounce and form the H pattern, use up time rather than price. Am I going to have the patience to sit there and see the profits shrinking in the core position, waiting and waiting for it to go to lower lows, and say, hey, you could have taken great profits, you could just get back in? Getting back in is always very difficult. Question then, XLF. Yeah, here's another thing. If the XLF cannot hold gains, whoa, look at that. XLF is down 0.37. It's only 1.68%, but it's at 2168. And where does that take 2168? It takes you below all the left side support levels into the gap. Remember that big gap that the market had on the 4th of March and the 3rd had closed at 2153 on the financial S&P Select Financial Spider Fund, and then it gaps up to 2174. Now it's below that in the 2168, filling that area. This is not good action at all. Now we're talking about real bearish action when rallies fail this quickly. First of all, when rallies extend higher because of a short squeeze, and then they fail. So let me run the numbers here. Basil Chapman sitting in for Larry Pesavento. I'll be back for my show. My service is the opening call. Check it out. This is a really interesting period where you can check it out. And there are certain facets that are really important to be able to see visually. One of those is how the right shoulder failure in the XLF went up to a peak E while the stochastic was pulling back and the MACD deflected lower. That's gonna, I'm trying to show that chart to subscribers tomorrow. Meantime, here we go. The volatility index. Make it as simple as you can. Volatility index up at 1521. That is really important. Why? Because if there was a continuation pattern today from the low of yesterday of 1370, in the 13s, that is just intense buying pressure. And that would have said the market might not have gone up much, but it would have held. In this case, you've got the volatility going up. You've got this exact inversion. Remember, we were looking at this chart a little while ago when we had a call from Sean, and he said, looking at my opening call from the overview section, this is where I give an incredible amount of detail about what to expect intraday, what would be a failure. And now look at this. The 200-period moving average of 16,223 is very important, right there in the 120-minute chart. But you've only got a peak C in the VIX index. Now, VIX indexes are it's a derivative of something else. So it...
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.